Let's start with the forecast. Some controversy around the forecast. I'll go through the controversy. We don't speculate, we don't assume, we don't guess, and then a month later it felt like there was some speculation and some guessing about policy next year. I just want to talk about your approach to the forecast. Was it about the data for you, or was it about the incoming administration?
It's about the data. It's always about the data for me. We don't know what the incoming administration is going to do. You know, new administrations, no matter when they come, always put a slate of programs together. And really, as a policymaker, I want to see the net effects once I see clarity about what those policies will be. So I was focused on the incoming information and what it means for the outlook. And today, I feel like we've got policy in a good place, the economy's in a good place, and we are prepared for whatever comes before us.
What happened in the past 3 months that caused the Fed and perhaps yourself to be much more concerned about the stickiness in inflation?
Well, the data happened, and you look at the data, and what's happened is that there's two things that have occurred. First of all, the economy remains in a good place, and the risks to the outlook are equally balanced between a risk to inflation or a risk to employment. That's where we wanted our goals to be. And we adjusted policy when we had confidence that inflation was heading down, and we adjusted policy some more to ensure that we have a balanced labor market that continues. So that's where we are. But then the data on inflation have been coming in a little slower. I wouldn't even say sticky or stalled. I would say the progress has just slowed relative to what we had wanted. But that's a typical pattern. It's bumpy. As you get to the, from 2.5 or 2.8 to 2, it's just a bumpy path. Go ahead, please.
But at the same time, some people were wondering if there was this stickiness, and I'm looking right now at, say, the Cleveland CPI now, and it actually has ticked up for the month of December from November. There was this question, why did the Fed cut it all?
Sure, and again, I'm going to reassert that it's bumpy. Remember earlier in the year, we had 2 months of data and people said, oh my gosh, it's reaccelerating, and then we had it come down. So inflation data, you can't focus on 1 month or 2 months. The most important thing for me was that we needed to recalibrate policy. I saw this as a close call. Was 75 enough to be the recalibration we were looking for, right-sized policy to meet the economy we expect, or do we need more? Ultimately, I determined that the 100 basis points was really the right level. Now I feel we've got that recalibration phase behind us, and we're in the next phase. And the next phase is really looking at the incoming information. We can return to a more typical pattern of gradualism for the Fed. We've practiced that where with a lot of uncertainty, you adjust the policy rate, then you wait watchfully, and you see what transpires, and then you make further adjustments. That's the phase I think we're now entering.